Hey guys, we are going to cover Uber in this video. Now, this has been a company that I've had my eye on for a while now, but I didn't know where my conviction was at with the stock. But the recent decline of the price has made this look more and more attractive, and so we will see if this company deserves a spot in the public portfolio. For those of you that are new here, check out my last video. I started a public portfolio and we are doing the 30 to 300K 10x challenge. I'll be providing weekly updates with the video and also giving buy and sell alerts through my Twitter account. And so let's do some stock analysis. So we're given a snapshot of the company's progression since 2019, and we'll use this to compare pre, during, and post-pandemic growth, and you can see the recovery and growth in Q1 of 2021, even compared to the company's previous peak. What's important to pay attention to is the change in the revenue segments. In Q4 2019, deliveries made up of only 24.45% of Uber's revenue, where in Q1 this year, it accounted for almost 2/3 of revenue. Adjusted EBITDA has also improved a lot over this time period for deliveries and freight. And what freight is, it's Uber's segment that connects truck drivers to shippers looking to move cargo, similar to its ride-hailing business that connects drivers and people. And finally, their mobility segment. This division saw a pretty dramatic decline, but the company has already noted that mobility has been doing better because of that already, and we can see it here in the dark green lines. Now, this makes me super confident in the recovery of mobility and ride sharing. I expect this segment to improve over time, especially when the volume comes back. Okay, gig worker rights. A hammer that's been thrown into the Ubers and DoorDashes of the world, the elephant in the room that we'll have to address. So in the Q1 earnings report, the CEO mentioned that the company was expected to be profitable on an EBITDA basis, which is a big deal because I used to question whether Uber would ever get there, and that's what ultimately stopped me from buying them in the 20s and 30s. Big mistake. Governments around the world are now targeting workers' rights. Joe Biden recently nominated David Weil to oversee gig worker rights, and this guy previously served under the Obama administration and was a wage regulator and investigated into companies and their use of independent contracting. Biden and the Labor Department has also pushed for higher minimum wages and rescinded the Trump-era rule that would have made it easier for businesses to classify their workers as independent contractors. The UK has also pushed for something similar, and we need to remember that Uber operates all over the world. And now what I think about all this, I say it hurts them in the short term, but everything else is falling into place for this company, and I am still convinced in what they bring to the world. Now on to Q1 earnings. Uber posted revenue of $2.9 billion, down 10.6% from the year before, but a good recovery from Q4 that saw the second wave. It looks like margins and profits both fell, which is not what you'd like to see actually, but there is a reason for this. There was a $600 million accrual made for historical claims in the UK, and this was related to driver classification. So this took out a large chunk of Uber's revenue. And when we look at the other line items, we also notice cost savings in SG&A and expenses as a whole. And when we drop down to EBT, there's a $1.68 billion gain on sale of assets. This is Uber selling Uber ATG, their self-driving unit, to Aurora. And what they did after was invest $400 million for a 25% stake in the company. So it'll be interesting to see how this plays out down the line. And to finish off, the company posted a loss of $108 million, pretty much their best quarter since to date in terms of reaching that goal of profitability. So overall, I'm not going to say they had a blowout quarter, but this was a step in the right direction. I like what they're doing as a company, and the crazy thing is that these companies IPO'd near these current prices. And they made a ton of steps in the right direction, and years down the line, the potential upside for Uber should heavily outweigh the downside. Here, we have a projection of Uber all the way out to 2027 like usual, and I'll go ahead and explain some of these numbers. For revenue, I follow the average of analyst guidance up until 2025, and these growth rates are pegged by a few Uber analysts that have covered the stock for years now, and so this looks pretty reasonable to me. Next up, we have the cost of revenue for the company. I increased this line item by 45% to account for big changes in the gig economy structure. With all these different laws being passed, it will most definitely hurt the company's bottom line. The company expected to be EBITDA positive by the end of the year, but this pushes them back by another year in my estimate. It could be better, it could be worse. And in terms of depreciation, the increase should be pretty in line with how it's gone up in the past years. I said at a rate of 5%. And so R&D, this dropped quite a bit in 2021, and I'm going to assume it continues to drop, and I only say this because Uber selling off their self-driving unit looks to me like they're taking a more passive approach to R&D by investing in companies that are solely focused on developing the tech. And we will skip these line items here. You can pause and read, of course, but there isn't too much to talk about. I will move on to interest expense. I looked at the debt structure and timeline of payments due. They have $7.6 billion to pay off, and these payments will be decreasing with a larger lump sum payment due in 2025. And last, we will look at earnings before tax, projected EBT profitability between 2022 and 2023, and years down the line, you can see the company is generating pretty strong cash flows. So if Uber manages to get here years down the line, the stock price should reflect these gains. On to share price projections. Uber is currently trading at a revenue multiple of 5.5, so I have the range set within 4 to 6 times in the highlighted rows. And in 2021, we get a current share price range of $34.71 to $52.07. So it looks like we also get a 12-month price target of $46.63 to $69.94. And I would lean more towards the high 50s and lower 60s for now, just because there is some uncertainty around the stock. But over the years, you can see the progression in the stock price, and say if it were to trade at 5 times revenue in 2026, this gives us a share price of around $106, which represents a 111.24% total return and a 16.13% annual return. The average return from the S&P 500 since 1926 to 2018 is around 10 to 11% at best. So Uber is a stock that could potentially outperform the market for the next 5 years. Uber gets that stamp of approval from me, and I'll be looking to add that into the portfolio. And that is it for this one, guys. If you enjoyed it, please hit that like and subscribe button. I will see you next time.